Good afternoon. It is I want to say it's Thursday, May 14th, and I didn't record my trades the past couple days. I did get smoked, and that's not why I didn't record them. So I do want to go over them today. But yeah, that's not why I didn't record them. Um, there was something going on with my recording software. It was messing with my computer. So let me pause this video and reframe the application. All right, today's the 14th, so that means the 12th was when I didn't. Yeah, so I'm pretty sure what happened on the 12th was, I was just sticking to the bias that was up. Um, so let's look at this 17,000. Or no, I think this was it. Yeah, so I remember on the 12th that I went long above this bar and it just kept going down. I'm guessing where was my stop at? So 403. It looks like I sized in too big. I don't remember the details of this one, so I'm just gonna skip that. But this one, uh, this was just an example of I had the right idea, but I didn't put my stop in the right place. And really, what I was doing was I was looking at the daily chart. So here's the daily chart. And on Monday, we had this reversal. So on yesterday, or wait, hold on, was this is the 12th. So this is Tuesday. Okay, excuse me. Tuesday, we had a reversal bar. Wednesday, we had not broken the high of this reversal bar yet, and we were trading down here. And so let's see, yeah, all the way down here. That's it. Okay. No, okay. So I took, okay, now I remember. We had broken higher. And so I'm like, okay, I don't think that we are going to make a new low. That's what I was betting on, was that we were going to continue higher. And I didn't put my stop below this because it was too much. But, that's problematic. I think, maybe taking a small stop loss and then getting back in, because the premise is still valid. Until we tick below this bar, the premise is still valid. And you can see I would have made plenty of money. I sized well. I only took one contract. So the what did I lose? 34. Yeah, I think it was 34 points. So that's what, $170. It was a little more. So $170. Um, and really, I think what I should have done, like I said, was just tighten the stop and then re-enter on a reversal up. And I can pull up the 165. Yeah, this is what I was looking at in real time. So I buy up here thinking it's a pullback. The pullback keeps going. I put my stop below what was the low for the day so far. We ticked below that, boom, before we reversed. And so, you get a second leg down. First of all, you make a higher low. So you're thinking, okay, you're good. Maybe you exit below this, get out, wait for a reversal. So this is too quick a reversal, I think, unless you like those three entries, um, or these three bars closing bullish, then I think you gotta wait for a higher low, which comes right here, and then you get another higher low. So any of those are good entries. And, I think, to be fair, this is a good entry too, this bullish engulfing bar. But anyway, the risk reward was, I did keep it at 1 to 2, so 34 points. So actually, no, that wasn't, because I think I had my target at like about right where it turned down at like 84, I remember. So it was really a 1-to-1 risk reward. So not very good. And that's another reason to get out. Get out with a small loss. I mean, look, if you measure this move up, A reasonable place to exit would be when you get this huge bar that goes way past the 50% mark. I think that's very reasonable. So anyway, yesterday didn't go too well. Today, we had a strong move up, and I wasn't trading this chart. What was I looking at? I was looking at the 1300 tick chart, I believe. And we start big move up, we sell off, and we start moving in what I interpreted to be a range. So let's see. There was a lot of entries in here, and I think I kind of. All right, so this first entry, get in. I get in long, I think anticipating us going higher, and then I was like, you know what? No, that's resistance. I get stopped out, 7 points, 21. So that's you're down $100 at that point. Then we come here, and I like this breakout. I was like, all right, this is the first break lower. I'm anticipating a range. I buy 5 contracts. It goes a little above, maybe above this bar, so I enter with 5 more. And my plan was to take profits near the highs. 5. So I keep buying the whole way up, which I like. And I took profits here. And this was a great trade. I really like how I played this. Ended up being a $500 winner. So at that point, I was up. Actually, it was a little more than that because I was up $500. So it was probably a $600 winner. And I noticed I have 2 accounts. So my trade copier was off. And I definitely got a little annoyed with myself at that. I like to think I kept a pretty cool head. So I enter down here, and then we go lower. I think my stop, what's the low here? 1575. Yeah, so I mean, it didn't hit my stop, which was below this bar. And so when we go higher, I added. And I think that was right at the original entry price. Yes, indeed. And then I enter some more, which I shouldn't have done after it ticked above this bull bar. But I did move my stop. It looks like I tightened it a little bit. So I only lost a little bit, 1725. Not exactly sure, but it looks like I like that I tightened my stop. Problem is, I re-entered right away, right after that. And it's like, just chill out, man. It just bounced at the midline of this range. So just wait a couple bars at least. And you see I get stopped out 5 points. So 5 times 5,
Connection
250
lost.
points, or 25 points, excuse me, $125. And at this point, I'm copying. So my one account is still up. The other account is down. Stop gets hit. I like this a little bit. Bought 5. I like this. Why? Because it was just a steep sell off, and I like that we were bouncing at this potential level of support. But then we start to go sideways, and I think looking at this price action, I'm thinking a reversal, which in the end, that's what the market did. I was about to say I'm correct. I was correct, but I mean the market is going to do whatever the hell it wants to do. So I wasn't necessarily correct, but that's what the market did. It reversed. But you don't know what's going to happen when you get all this overlap. That's a tremendous amount of overlap. I stuck with it, and I'm not like, I don't think that, you know, look at the bias of the past few weeks. You're not going to be punished as much for sticking with that overlap stuff in a market like this. However, in a market like this, you are going to be punished very often for sticking with that overlap stuff. So that's something I gotta, keep in mind. So I enter, 5. It breaks higher. I enter 5 more. It comes all the way down. So at this point, you're down. You're losing. It breaks higher. Nice strong bull bar. I enter more. So that is where the mistake lies. Definitely a mistake. And then I start, trimming the position. I took some off, but I still believed that we were going to go higher. So then I enter back in. So I like, I like that I played that well. My target was the midline of this range. I thought it could go to the top, which it did, but I like the midline as a level of. I mean, you can see people took profits exactly where I took profits before it goes to the high of the range and sells off. So, I think for I know that it affected me that my trade copier wasn't on in that first trade, but I feel like I traded fairly objectively. I'm not sure. In here, I think that was the worst part of the trading, but I do like that I trimmed my losses and then added back when it broke out. I think that was pretty, level-headed. So those are my trades today. Here's the daily chart. Crazy bull breakout again. Here's the weekly chart. And let's take a look at how May is shaping up. So, we're breaking out. We could continue higher and it could turn into a doji, or we could just keep rocketing up. Hard to say, but I'll be back tomorrow.